How important is the analyst effect on SoFi, and what exactly is the analyst effect? After hitting all-time lows for what seemed to be almost every day for the past few weeks, SoFi stock has seemed to regain its footing and is taking back all that lost market cap. This is after Piper Sandler analyst Kevin Barker had expressed that the market is over-discounting SoFi stock. Coincidence? Is this the reason SoFi stock price is rallying back up? Let's take a look.
That is SoFi is right now one of our trending tickers on our Yahoo Finance page. Right here, as you mentioned, more than 2.5%. And this is also after another analyst called Piper Sandler's Kevin Barker upgrading the stock to an overweight, saying that investors are over discounting the stock, and talking also about earnings momentum going into 2023 and 2024.
Although Kevin Barker's opinion towards SoFi stock has had a positive impact on the stock, a few analysts have lowered their stock price forecast while others have remained neutral. One important thing to note, however, is despite a couple analysts lowering their price targets, and in our opinion, more to save face among their peers than anything, no analysts have issued sell ratings. While analysts' opinions don't guarantee expectations, their opinion toward a stock can affect sentiment, which can in turn affect the stock price, even if only a little. In this video, we'll be covering hot takes on SoFi stock from different analysts to find out what SoFi investors could possibly expect in the up and coming months. So stay tuned and watch until the very end. You don't want to miss any of this. Just a disclaimer though, we're not financial advisors and none of this is financial advice, so always do your own due diligence.
All right, now let's get started.
In the midst of investors drastically shorting SoFi stock, Piper Sandler, one of the leading investment banks, has upgraded its SoFi stock rating from neutral to overweight with a price target of $10 per share, the first upgrade the stock has had in a while. Here's analyst Kevin Barker on the key reason why they upgraded their SoFi stock rating.
Yeah, it's been under a lot of pressure. There's funding pressure across the business, a lot of headwinds, but earnings are set to inflect higher, which we haven't seen for the last several years for SoFi. And I think as earnings start to move higher and we start to see that in the back half of the year, the market's going to come back to SoFi. And with the stock trading where it is, I think there's, you're going to see a lot of the market start to favor it once again.
Now, Kevin, I wonder...
Although Mizuho Securities lowered its target price from $14 to $9, Mizuho analyst Dolev still seems to be bullish on SoFi, stating that SoFi's last earnings call was Class A.
I think on SoFi, and it's interesting that you say that the market cited like lighter than expected guidance. Actually, they beat Q1. They raised up the guidance on both revenue and EBITDA. The fundamentals are hitting on all cylinders. They're actually probably gaining share from some of the upstarts of the world. So I think what you're seeing today, that's a little bit of the era of pre-releasing, but also I think a lot of the upstart kind of like, sorrows of what, it's dragging it down. I really think that SoFi would have been up, had they not done this, they would have been up like 10, 15%. This was a Class A quarter for SoFi. But
there are problems. Wait. Dan, there are problems here, right? What if we see a turn in the credit quality for consumers? The postponement from the Biden administration of the student loan payoffs, they're losing on that front. Aren't these big issues?
Those are big issues, but they're actually, the moratorium extension is already in the numbers. What we're seeing here is like an upping of the guidance despite the moratorium. And if you look at their personal loan issuance on a quarter-over-quarter basis, they added like $500 million of personal loans. So they're gaining share. Now, if we get a macro event and things turn south, that's not a SoFi issue, that's a broader issue. But I'm saying specifically for SoFi, this was an amazing quarter and they're not getting any credit for that.
A day after the release of SoFi's successful Q1 2022 results, Oppenheimer analysts increased their SoFi earnings per share estimates. Leading global full-service brokerage and investment bank Oppenheimer is now expecting an EPS of -12 per share for the second quarter of 2022, up from its previous estimate of -13 earnings per share. They have an outperform rating and a $13 price target on SoFi stock. However, not everybody is on the same page as these three at the time of recording this. After SoFi's Q1 earnings call, Credit Suisse and Citi both dropped their price target for SoFi. Credit Suisse lowered its SoFi stock forecast from $15.50 to $9.50. Citi, on the other hand, dropped its target from $17 to $11. That's a $6 difference for both Citi and Credit Suisse.
They're in cahoots!
Alright, maybe not, but that's awfully strange. Citigroup maintains its buy rating, Goldman Sachs and Credit Suisse maintains their neutral rating, and Morgan Stanley remains its equal weight rating. Now, with different opinions coming from different analysts, how does this all tie together? We want to hear your thoughts. Comment down below. Do you think analyst opinions affect you in any way, or is it just a load of BS? According to TipRanks, the majority of analysts officially covering SoFi stock rated it as a buy. To be exact, 4 out of 12 said that the stock is a hold, while the remaining 8 said buy. And now, what can SoFi investors possibly expect moving forward?
Grow organically.
I think they're going to grow organically. I think they have bigger things that they're looking at over the long term. And if they can establish a deposit base and a strong capital base, which it appears like they have with the capital that they've raised, you should be able to continue to grow at a fairly rapid clip. If that were to continue, you're going to see quite a bit of upside in the stock as long as the market starts to stabilize here.
But do you know what's worse than the negative effects of analysts downgrading their price targets? The fact that 71% of you guys watching our videos are not subscribed to our channel.
Come on, man.
Subscribe to stay updated and also to help us hit our goal of 4,000 subscribers by the end of the month. Currently, we're at 3,855 subscribers at the time of recording this. Despite market conditions not siding with SoFi right now, a number of analysts remain bullish on SoFi. Any way you look at it, analysts do have some type of effect on how the stock is viewed in the media. Here's the Wealth Gambit hot take on it. As of late, analyst price targets seem to have a lot more to do with current market condition, market sentiment, and saving face than they do on the actual company. However, their ratings seem to reflect their true feelings toward the company's fundamentals. Let's hear what Commander Noto has to say about this.
Yeah, the best way to think about our business is that we're in a diverse set of businesses because we have a unique strategy. We've developed a one-stop shop on digital for all your financial needs. So we have 4 different loan types. We also have a new checking account with 1.25% interest when you do direct deposit. We're also in the invest business, so single stocks, robo, crypto, as well as ETFs. And then we have a technology platform that may not be that well understood. We power a number of the key neobanks as well as B2B enterprises through our Galileo technology, as well as Technisys, which is a core banking technology. So 3 different businesses that all have different growth characteristics. I'd say our member is doing quite well. It's a high mass affluent member. Average income for our loans right now is over $160,000 and really strong credit at 740 plus FICO score. So that diversification is allowing us to gain market share. That's driving the record results. The $322 million of revenue you mentioned was up 49% year over year. And we had our 7th consecutive quarter of positive EBITDA, which is what we think is the best measure of profitability for our business. And we have a great balance sheet. So the diversification of our businesses allow us to overcome a lot of the volatility in the marketplace and drive such consistent results, which is why we also raised our outlook for the year to 1.5 billion plus, and 100, that's in revenue, and 100 million in EBITDA.
Okay, but
follow us on our social media pages at Wealth Gambit. We post financial news and dank financial memes every day. Also, don't forget to join our SoFi Investor Facebook group. We'll put the link in the description box down below. A special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all your support. Shout out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Shonda, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufran, and Jay Bone. Well, that's a wrap. Thanks for watching. We greatly appreciate it. Until next time. Peace.